Economic collapse, prevention mechanisms in place. You knew this was going to happen. Hey everybody, JJ. It is Thursday, June 11th, 2020. Let's get into the news. We're seeing massive debt creation, record levels of buying out of the central bank to keep this economy propped up, to keep the system from imploding. Even through the shutdowns, the engineered turnoff of the economy, and now all of the unrest that we're seeing nationwide, unprecedented amounts of stimulus and market intervention are being put in place right now. We're going to talk about the housing market, how the housing market is being kept propped up, and how it's going to continue to be propped up likely through the end of 2020. And if you've been on this channel, that is no surprise to you. You knew they were going to keep it propped up. Let's take a look at some information here. CNS News headline right here: the federal debt tops $26 trillion for the first time. This has jumped $2 trillion just in the past 2 months. That is a record. So anyone that told you that the people on the right were conservative were either one, mistaken, or two, they were lying to you. You know, these are the biggest spenders in history. They're already on pace to outspend the previous administration. And if it hasn't eclipsed the previous administration's spending, I think it's going to any day now. But the fact is, this is unprecedented spending. And you knew they were going to pull out all the stops here. Quick excerpt out of this article. The debt of the federal government topped $26 trillion for the first time on Tuesday when it climbed to beyond the 26 mark. Now the $24 trillion was just hit back on April 7th of this year. And you know this is only the amount they let us see. It is actually a lot higher if you look at the dark money. And if you want to look at unfunded liabilities, you're talking about hundreds of trillions of dollars. But this is just the public information that they put out there. And we know the Fed has been increasing their balance sheet also at the same time. Another headline here, same news source: federal spending and deficit set records through May. We told you this was going to happen. It's no surprise to you. If they were to pull back and not issue the record levels of debt and market propping, you would see a massive collapse, and you'd be seeing a lot of pain and devastation. So they're not going to let that happen right now. Will they let it happen down the road? I think so. I think there's an agenda behind this. What about the housing market? Of course, they have to keep the housing market propped up. They cannot let millions of foreclosures happen before November of this year for obvious reasons. We have the forbearances. We've talked about that plenty of times here. And this is a recent article, just an excerpt here. As the home buying season gets underway, median home prices are surging. They shot up 4.3% year over year as the number of homes for sale continues to dry up, ending June 6th. So we have supply and demand in play right now, very low supply. A lot of home sellers pulled their homes off the market. Prior to the shutdown, though, the inventory was on pace to be a multi-year high. Again, it was on pace to be a multi-year high. We likely would have seen the beginning of a housing downturn if it weren't for the shutdown. That froze the foreclosures and prevented the correction from happening. So prices are going to still continue to climb likely through the end of the year. Now it is still down. Typically it was 5 to 6% annual price appreciation, so it's still down a bit year over year, but still well in the positive with that 4.3% year over year gain. Right, nationwide, the median home list price was $330,000 in May. Also, record low mortgage rates. Yes, you've probably heard that a lot over the last few years. Well, now they even set a new record low. This is out of Mortgage News Daily. Mortgage rates fall below 3% for the first time ever. And again, that's no surprise to you. You knew they were going to keep going to lower and lower rates. The Fed is making sure this is going to happen. They're going to keep the banking system propped up, not just here in the U.S., but globally. Yes, the Fed is bailing out multinational banks and corporations and other central banks because it's dollar denominated. The Fed is worldwide propping up the entire financial system. Right, so record low mortgage rates, still easy money is out there. There are some banks that are making it a little bit more difficult to get a mortgage, but most of the banks know, they should know, that the Fed is going to be there, so lending is still happening. Now, when it comes to supply and demand, the total number of home listings on Realtor.com was down 25% in the first week of June compared to previous years. Supply and demand, you're going to see prices still stay high. No correction as of yet. Okay, bottom line here, folks, is they're not going to delay the day of reckoning forever. It's not going to happen. Article right here, National Mortgage News, 500,000 homeowners could be in danger of foreclosure, Black Night. Now, this leaves a population of nearly 500,000 homeowners who may lack the necessary equity to sell their homes and avoid foreclosure. A lot of the homeowners are just going to choose to let the home go into foreclosure once the forbearance period is done, because they may not have enough equity to pay off the old loan, the existing loan, and the closing cost. Now, one of the most common questions that I get is, hey, how do we prepare? We know what's going on, we can see it, but how do we prepare? I say prepare by the following. Assess the risk and assess what you want to do when the correction happens, right? So I'm in 80% cash. It doesn't mean that's what's going to be best for you. I am expecting a big home price correction in the very near future, so I'm in 80% cash. That may not be the best for everybody. I plan on buying a bigger and better property and renting out my current property when the correction happens. Could I be wrong? Absolutely. If I was 100% convinced of a price correction down the road, then I would be in 100% cash. I am not. I am also hedging, or I'm also investing or preparing for hyperinflation. What if we go right into hyperinflation? So what if there's no correction or crash in real estate or in the economy? And what if they continue to liquefy the economy to infinity? Never-ending liquidity. What if there is no correction? That means you need to have assets that will inflate along with the hyperinflation. That's why I'm about 10, maybe 12% in precious metals. Right? If I thought it was going to be straight into hyperinflation without a correction, I would be 100% in precious metals. All right. I'm also about 8 to 10% into other digital assets. I think there's going to be a deflationary correction first, and then the bank solution or the Fed solution will be more debt, even beyond what we're seeing right now, which is already mind-blowing. I think it's going to be so massive that people are going to their heads are going to pop off. They're going to be so surprised. Right, but until then, the dollar is still the world's reserve currency. I don't see a massive devaluation in the dollar in the near term. If I did, again, I would be 100% in metals to hedge against that hyperinflation, against the dollar destruction. All right, that's just my take on it. Let me know what you think down in the comments. What are you doing to prepare? I know a lot of us here are on the same page, so it's always interesting to hear about other views. There's actually people out there buying real estate right now because they think that the home prices are never going to come down. They think the Fed's just going to keep on inflating these markets. They're going to keep the banking system propped up forever. That's what they think. I disagree. I think it's a game of boom and bust cycles. That way they can consolidate the wealth up to the top. But that's just my take on it. So let me know again what you think. Thank you for watching this report. We're going to be back very soon with the housing, or rather with a stock market analysis. There was a big pullback today. I don't think it's going to be the beginning of a bigger correction. You usually see pullbacks along the way, so we're going to talk about that. But a lot of new investors got really hurt. A lot of people jumped in with Robinhood accounts, and Robinhood saw a record number of account openings just in the past 6 months since the market turmoil has taken effect. A lot of people wanted to get in and short the market. Other people long the market. They bought the dip. So some of those traders are seeing a lot of losses right now. But again, I don't think it's a bigger correction on the way. Pullbacks happen even in a uptrend, manipulated upward market. Nothing goes in a straight line forever, right? So that's about all for today, everybody. Thanks for watching. Bull to the bust. See you next time on the channel. Bye for now. Today's episode was sponsored by SD Bullion. You may have noticed that physical metals are getting more difficult to get your hands on, and a lot of bullion dealers are running low on supply. But I've got a link for you down below. Just look in description. It's going to look like this when you first get there. Just go to the left column and click what you want to look for, For example, silver rounds. Click silver rounds and the quick links right here to the left, and this will take you to those items that are in stock at the very top, so you don't have to keep scrolling to find what's in stock. As you see, we have $20.30 silver rounds right here. Prices are subject to change, but these are the rates, the prices as of today. Also, this is only while supplies last, so check the link below now to grab some precious metals while you can.